Welcome to NASDAQ Trade Talks. I'm your host, Jill Malandrino, global markets reporter at NASDAQ. Joining me at the market site in Times Square, we have David Donovan. He is Executive Vice President for the Financial Services Division at Publicis Sapient. We're going to take a look at the regulatory, operational, and tech challenges facing the C-suite. David, welcome to the market site. It's great to have you with us. And there are some challenges in financial services. Give us a high-level view of that.
Thank you. Thank you, Jill, for having me on the show. I think with financial services, there's a couple of different challenges going on. The first one is really around growing revenue. So if you look at even the most recent bank earnings that just happened yesterday and Monday, I believe, most of the banks made their numbers except for Goldman, which was a little bit of an outlier because of their investments. But in all cases, they made their numbers, but their revenue didn't really grow. So I think when you look at their traditional portfolio of services, there still is challenges around growing that revenue. Along with that, there's always going to be regulatory challenges, and I think regulatory issues have played a big part in why capital markets revenue is muted. And I think really for them, it's really around leveraging technology. I think with the advent of digital technology, consumer expectations are much higher because of the experiences that they've gotten with the pure tech plays like an Apple or an Amazon. That puts a lot of pressure on banks to recreate those same experiences.
Mm-hmm. And there's also competition for talent as well. So another thing holding the banks back is traditionally units have been siloed. Products are siloed, business units are siloed, and in today's day where technology crosses all those lines, you have to get out of that mindset.
Absolutely. I mean, banks have essentially, in my mind, three problems. One is they have a legacy tech debt, which is their legacy technology, which is not all digital. They have product debt, so they're used to selling products that they think their clients want instead of actually finding out exactly what their clients need. And then they have organizational debt. So if you think about them, their organizations have been constructed over the last 20 years. It's never evolved. And so I think when you look at the competition that they're going to face, especially if big tech comes into their space, they're going to have to become more agile in the way that they're going to deliver services to their end clients.
Yep. So what's the solution here? Transitioning all these businesses to digital?
Absolutely. I think that you have to be able to become as digitally native as you possibly can. I think for the banks, because they have legacy technology, they're leveraging different techniques like DevOps and things that Publicis Sapient can help them with. But I think there's going to be a point where they're going to have to look at their business model and actually evolve their business model to more of a platform. My belief is that for banks to really thrive in the future, they're going to have to break out of their portfolio of traditional services and go into more ancillary services, whether they do that partnering or whether they do that creating new businesses. I feel like that's going to be their future.
Yeah, and you brought up a really good point in one of the notes that you put out, how Amazon did this. User experience was key. Data management and how you're using their data is key, as well as the technology experience as well for the customer. And it sounds like that that's for any business, not even just banking.
Absolutely, but banks have a great advantage if they're willing to take it. If they're willing to go for it. I mean, they essentially have as much data on people as anybody, and they certainly have the capital and the ingenuity. But the problem is that a lot of that data is locked within their legacy infrastructure.
Right.
And that's where digital comes in. Digital can help unlock that data so that they can be able to not only create new business lines, but also drive alpha depending on, in their capital markets divisions, or for asset managers, same thing. They can use that data, whether it be structured or unstructured, to really create, new business opportunities.
And to wrap up here, that's my question to you. Interest rates are low, right? So net interest margin is being compressed. Trading revenues are certainly down, right? I mean, They're closing trading divisions all the time. Even for the online brokers going to zero commission, that impacts their revenue as well. Where do these new sources of revenue come from? Does it go back to data?
Data will play a big part in it. I also think that if you look at, I'll give you an example with Goldman Sachs. Like, they're partnering with a platform company, Apple, right? With the Apple Card. Apple has an embedded user base. So maybe those customers become Goldman customers. So that's one way, partnering with a platform that already exists or creating a platform. So for example, JP Morgan or Bank of America, they make a lot of money lending. Why wouldn't they create solutions for insurance, for utilities, for energy, for telephony? So all of a sudden now you're offering the consumer a bundle of services that you may even, you could partner or you could internally create those businesses. But I believe that, Amazon's already proven, Apple's already proven the platform model works. And for me, if a bank thinks of themselves as a bank in 3 years, they're probably failed. They need to, offer more services than the traditional services they have.
It's almost like becoming an ecosystem for the asset acquisition is really what it is.
Absolutely.
All right, David, thank you so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.